Interest rate myth buster. When interest rates are low, prices go up. It's called demand inflation. It's called demand inflation. When interest rates are low, prices go up, right? Because the demand is high and that pushes the price up. The opposite is also true. When interest rates go up, prices come down because the demand is less. It's called demand inflation. There's two kinds of inflation: cost inflation and demand inflation. Okay? Now, we're seeing both all over the country because the demand inflation actually created the cost inflation. When everybody's buying everything because interest rates were so low, then the cost of things, even the supplies to make things and all of that, went way up, right? Just like the demand inflation, right, created that. So now that rates are going up to slow down inflation, that means prices are coming down. Y'all following me? Okay. So that's number one. Number two, rates are not really high. It's all perspective. See, when I got into business, and I know it was 20 years ago, right? Rates were where they are right now. When rates were 2, 3, 4%, that means rates were really low, but it's not that rates are really high right now. Having rates at 2, 3, 4% is not sustainable. The reason rates are so high and prices were so high was because rates were way too low. Having extremely low interest rates is really not good in the long run for the economy because we end up in positions like we are now, right? So, connect this to real estate, okay? In real estate, there are folks out there saying, oh, don't buy now because interest rates are really high. Well, the two things we just understood, two things we just learned, right? Rates are not really high. They're actually kind of back to normal because they were really low for a while. See, the 2, 3, and 4 was not normal. That's really low. We're now kind of getting back to normal, if you will. Okay. And then guess what's going to happen? When rates rise, what happens to prices? Boom, prices come down. Now, when you're making a long-term purchase, right, the price is what matters, not the interest rate, because you date the rate. When rates change, guess what you can do? Refinance, but guess what you still have? The same house that you bought at a lower price when you bought it. Does that make sense? Come on, people. We just got to think this through, right? If anything, right now and 2023 is going to be the best time to buy a house, even if interest rates stay where they are or even if they creep up a little bit, because you will still buy it at a lower price than you could have last year or the year before. You're buying the house for cheaper than you would have, but you can always refinance the rate. The rate is not something you're stuck with, but the price of the house is something you're stuck with for the whole time you have the house. You still have to pay off that balance no matter what your interest rate is. Knowledge is power, folks. Think it through. Call me if I can help you.